There we go. Welcome everybody. This is the Saturday morning Viper trading webinar. If you're here to learn about trading the financial markets using the Viper tools, you're absolutely in the right place. First, we have to get our standard disclaimer out of the way, so let's knock that out. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment and trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, so today's topic is optimal trade setups part 2. This is sort of more or less a continuation of some topics that we discussed on Thursday evening, which is part 1. I'm going to get into other types of trades, different things, and how to approach the markets. First of all, before we start, I'd like to do 2 quick exercises with the team here this morning. First thing is I'd like to see how many trade entries types can you name. This is a 2-part question. And the second part of the question is, what would be your favorite? How many trade types do you know of? You can type in a couple of 3, 4, whatever, how many you know. And then which one of them is your favorite? What's your go-to trade every day? And I'm talking about entry types of trades. While you're doing that, let me get over to a chart. So we got a little pop quiz to open things up here. How many trade types do you know of? How many can you name off the top of your head? Just type them in real quick. Trade entry types. How many do you know? And what's your favorite? Which one of the trade entry types that we have is your go-to trade every day? What's your favorite? Just take a quick minute here. Let the team settle in and let us all know what you like the best. All right, got some things coming in here from the team. Eddie C. says, I'm starting to like the region box trade. I like the KISS trade and the Phantom trade. Good. Nasir likes the Midband Phantom Retrace. Same with David D. Bass likes a little bit of consolidation. Midband and a Phantom. The first one, consolidation, being his favorite. Good. Retracement, Midband. Walter. Rude likes the Midband only. Phantom Midband Retrace from Rob. Same with Roger. No, Miles wearing in. Retracement trade is Walter's go-to type trade. And John R. likes the Midband. Excellent, excellent, excellent. Adam says pullback trade, tight consolidation box located at or near the midband. The favorite is the pullback to support or resistance. Perfect. Excellent. Those are all good. Those are good. Perfect. So the first topic I want to cover here, everybody should see a YM chart here. We'll try to get through all the equities and the crude oil here today. I know on Thursday evening I spent a lot of time on the YM chart. I'm going to try to mix that up a little bit more here today, and I'm going to sprinkle in some quizzes where I'll show trade setups, and then you're going to make the call. So before we can even think about what types of trades to take, we have to know the condition of the market that we're in. I'm showing Friday morning here. I'm here in California. Most of you know that. And this is Pacific time down here. So just relate these times down here to your time zone, wherever you're located, as far as that goes. Now, if you recall on Friday, there was some pre-market news. There was, I think it was some job numbers, different things that came out. Notice what happens here is, and this is why we strongly urge you to not trade news events or numbers that come out right exactly when they come out, because this is the kind of shotgun, almost like a little bit like crude oil inventory. So there's the beginning of 5:30 when the news came out, and here is 1 minute later. Clearly you have a shotgunning effect here where all these bars printed, I don't know how many bars here, I'd say probably at least 40 in a minute. Okay, so you don't know where you're going to get filled. This is just insanely shotgunning around, so you obviously want to avoid that. And we usually say to give at least 1 to 2 to 5 minutes after news to trade anything. Now, coming out of this little shotgun area, you did get a little poke up. and you got a pullback, I mean, you know, you can make the case that 2-3 minutes in, you did have a little consolidation box right here. We all know what those are. I'm not going to spend a lot of time in this particular webinar. Most of you, I think almost all of you, probably know the different trade types. You've listed them all already, so you know what those are. I'm not going to cover too much of the fundamental basics. I'm going to move more quickly into more advanced topics and how to deal with markets moving quickly. Here we see that the initial reaction to the news was shotgunning, and then we push up to a fresh swing there. We pull back, and we pull right back to the midband, which most of you have told me here that this is one of your favorite go-to trades. Now, let me ask a question about the midband trade. This one happens to hit right at almost on the midband. I'm going to ask this question of everybody in here. When thinking and talking and looking and about taking a midband trade, what do you find the most challenging part of taking a midband trade to be? When taking a midband trade, what do you like about it? What, perhaps more importantly, what don't you like about it, and what makes it so challenging to take? When thinking about any kind of market, it could be crude oil, gold, the Russell, doesn't matter, pulling back to the midband, what makes that trade so challenging sometimes? Roger comes in and says, if it's going to go deeper. Jeff G is coming in and saying, if the midband's going to hold, so that's related to Roger's concern. Eddie C, which line will the market hit? 2, 3, 4, 5, being patient and waiting for the rollover. Price action doesn't always get to the midband. Sometimes it's difficult to determine whether it's going deeper or will bounce above or below it. Okay, Miles. All right, so how do we deal with that? I know that's the issue. That's why I asked that question, because I know. Let's look at this in a couple of different ways. I'm going to jump back and forth between two types of trades that involve the midband. Here we have, and I said this a little bit towards the end of the Thursday webinar, but in our trading mind's eye, when we think about retracements after you have a thrust move. So here is the thrust move. We all know that. That's clear, right? It's when the market is pulling back that we start to get concerned about where is it going to stop, where is it going to bounce, and how is it going to do it. Let's look at different types of retracements in different contexts. And I'm going to put boxes around them like this. And I hope in doing this exercise, it will help you the next time you trade, whether it's Sunday night, Monday morning, whenever it is that you like to trade, or whatever market it is you like to trade. Think of the midband as an area, not as a destination. Okay? So it's an area. In other words, let me do a couple of them so you can sort of see what I'm talking about here. Okay, so here would be another area around the midband like this. Here would be another area around the midband like this. Right? So in each of these cases, in this case, the retracement went slightly below the midband. Now, I'm not going to talk trade entry just yet. I want us to just get through this notion that the midband needs to be a magnet and the price needs to go right to it. Because the fact of the matter is, sometimes it does. This would be a good example of this region box, you know, arguably my favorite trade, this little consolidation patch right at the midband. But we don't always get that. So we have to be prepared when we don't. Sometimes it'll go further. Many times in a powerful trend, if the trend is very strong and the force of selling or buying is very powerful, you only get very slight retracements that go towards the midband but never quite get there. And this, in fact, is the challenge of retracement in midband trades, isn't it? This is probably the toughest part of it. Wouldn't you agree? And it would be nice if we all had crystal balls and we knew, well, you know, I know when this is selling off, it's not going to get quite to the midband, but I'm ready for it. So how do we know? How do we know, irrespective of how far the retracement has gone, whether it's very shallow like this, or it goes all the way through it by a bar or two like this? How do we know when the retracement is over and the market is ready to resume its whatever direction it's going to take? How do we know? How do you know? Now I'm going to blow this up. I'm just going to take a minute. Just type in how you know. How do you know? What is the trigger? What tells you that, irrespective of how far it's gone in its retracement, that now the movement is resuming in whatever direction it's going to go? How and when do you know? While you're answering that and pondering that question, I'm going to open this up quite a bit so we can look very detailed at each bar. And hopefully this exercise will help you to know. Does anybody know? How do you know? You got to know. I mean, I know all of you trade. What is the trigger? What tells us, okay, this retracement is probably exhausted itself, and now the move in whatever direction, up or down, is going to resume itself? Answers coming in. Rob J says no swings are violated. Okay, good. Pat G says you have to have some kind of reversal bar. Ding, ding, ding for you, Pat. You get the gold star. I'm going to go bar by bar here on each of these, and we'll do this exercise a few times so that we all get a sense of what's happening, right? Here the bars are coming down. Bars are coming down in the retracement. Bars are coming down. Bars are coming down. And we get a reversal bar. Now I'm going to ask a question. Here's 3 bars in the apex, the bottom of this sell-off. You get bar 1, bar 2, and bar 3. That one right there. Oops. 1, 2, 3. Out of those 3 bars, which one is the reversal bar? 1, 2, or 3? 1, 2, or 3. Which one of those bars is the reversal bar? 3. Good. Why? Why is 3 the reversal bar? Because it closed up. Good. It closed up above the prior 2 bars. Yes? That is the reversal bar. The bar has closed up. It's higher than 1 and higher than 2 and closed up. That is the reversal bar. Now, wouldn't we all agree? And this is the most important part takeaway from this morning, okay? So I really want to drive this home, that this bar, for most of us here, would be the entry bar, and that's how we know. As long as a market continues in the retracement direction without reversing, so if this kept going down, 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 with no reversal bar, then we don't have a reversal, correct? Let's go to the next one. This very shallow retracement. 1, 2, 3. 1, 2, 3. What's the reversal bar? 1, 2, 3. 3. Good. Now, do you think that you can train your eye, if you saw this pattern enough, if you saw this pattern over and over and over again? Well, ideally, Tom, what would happen is you can see with each of these 3 bar conditions here that the bar closed above the prior 2 bars. So it reversed up. In this case, it reversed down. Okay? That is the entry bar. This is how you know. Because what's happening here is as each of these bars unfold, each of these bars right here, 1, 2, 3, 4, I don't know, there's probably 5 or 6 bars that come down here. What is actually happening? Why are these bars going down in what appears to be an uptrend? Why are they doing that? I mean, it's an uptrend. The bars should be going up. Why aren't they going up? Profit taking. Profit taking. So everybody in all the markets and whoever bought in from whatever level, it could be way over here somewhere, even off the map somewhere, trading programs, scripts, algorithms, traders all over the world to trade these markets are getting long and they're buying. And so the upward pressure is up because there's buying. The natural recourse of that is to take profits, just like we do, just like you do, just like everybody here this morning. We all take profits, yes, from our buying activities. The profit taking has a tendency to pull a market back in an uptrend. Now, when a market reaches some kind of equilibrium, then the profit taking stops and the buying resumes, resulting in an upward draft back to the market where the buying resumes and it pushes the market right back up. Now, this little 3-bar reversal is sort of a microcosm, if you will, of where the equilibrium turns from profit taking to resumption of buying. That's what the 3-bar reversal is. Now, do they all work out? Is this 100% perfect trade? No. But here's what you can do on many of these trades, particularly early in the morning when you have great volume and good volatility. You can go ahead and take the trade on that bar, and then you can go with your 12-tick stop. Let's do a couple examples very quickly here so we're all clear about this, okay? So you go ahead and you take the entry on the reversal bar, whatever tool or however you decide to get in. I'm not going to discuss all manner of tools today. I'm looking at trade entry types. And you can go with your standard 12-tick stop, which would put the stop way down here, somewhere, if you're using Object Trader with the default settings. So that's a pretty beefy stop. Now, you don't have to do that, right? Let's suppose, maybe you want to give it a little bit of wiggle room and you can go a tick under this bar or a couple of ticks under that bar. What I'm trying to impress upon you is that you don't have to be nervous and scared and feel some trepidation on taking these, because that's what many of you said on the first few questions that I had was, I'm nervous it's going to go too deep. I'm nervous it's going to go too far. And implicit in what you're saying is, I'm afraid I'm going to get stopped out with a loss if I take it too aggressively. That's basically what you're saying, right? Well, you don't have to be nervous on a lot of these because you can put the stop very tight. So your risk is very small. And if you get stopped out, it's okay. You can get back in, and eventually you're going to catch a runner that will make up for a small loss. What's that, Eddie C? You would have taken the yellow bars? You might have. And depending on how tight well, let's see how far it retraced. He's saying he would have got in here. And let's see how deep it went. Let's say that bar was at 58 and it got all the way here to 47. Well, yeah, I mean, it would have been very, very close. That would have been close. If you'd taken that bar right there, you were right at 10, 11, 12 ticks. That may or may not have gotten your stop before it reversed and came up. Likewise over here, on this shallow retracement, entering on that bar right there, and if you put your stop at just above that bar here, say a couple of ticks above that bar right there, you're in at 40, and let's say your stop is here at 50, 48, 49, 50, a tick or two above that bar. So you're risking about 8, 9, 10 ticks. So you're going to get stopped out. I mean, this is the other thing that I get all the time when I talk with traders is, you want to achieve perfection and you don't want to have stops. I think a healthier way to look at trading is you're going to get stopped out. You should just accept it because it's going to happen. It happens to everybody. The key, though, is to keep the amount that you get stopped out small. In other words, you only want to get stopped out, say, out of 4 or 5 trades. You might want to only get stopped out once, maybe twice, for small losses. And that's why it's critical that when you have a runner trade that is in a powerful trend that's running, that you want to let that run to at least be 2 or 3 to 1 over your losers. Because then, if you think about it, if you can let your runners run and the amount you gain from the runner trades is 2 or 3 times the amount that you get on a loser trade, then even if you're 50-50, say half your trades stop out, what happens? You still make money. Some questions coming in. You could use exit on close as your stop, Jeff. Yes, instead of a hard stop up here. Yeah, there's different ways to put your stops in. Here, over here, for instance, you can see you had 1, 2, 3. Arguably, the reversal bar was right in here to get in on this retracement, which would not get. Now, I want to frame this in the proper context. What we are talking about here is taking trades early in the morning on the equities or crude oil when you have trends and good forces pushing these markets around, where you get good clean reversals, you get entries, and you expect to get some runners. Let me contrast that with some other time periods in the markets. Let's get another market down here to look at an opposite of that situation. How about the NASDAQ right here? Let me get this other chart out of the way. Can you give me 1 second, please? Get this one out of the way here, and I'll move the other one over here. You ready? All right, I'm going to do a pop quiz. Ready? And I'm going to give you 30 seconds on this one. Pop quiz. You ready? 30 seconds. It's a NASDAQ chart. I was going to make it extremely hard, but in all fairness, I'll make it a little bit easier, just because we're trying to kind of get started here. But as time goes on, I'm going to make these a lot tougher. Ready? Here we go. Here's the quiz. On this chart, can you name 2 or 3 trade entries, either at a level, that would be a time is down here, 1140, 1137, a time, or a level, or a level like 47, 1150 or 47, 22 or something, a level and or time. 2 or 3 trade entries. There are a few on here. It looks choppy. I know it does. It looks really choppy. And I'll give you 30 seconds starting right now. Time and or level. Starting now. 2 or 3 trade entries. Where are they? Just take a look at it. Think about it. Most of you, almost everybody typed in the trade types that you know and the ones you like. Got to be a couple of trades on here somewhere, right? Where do you see them? Where are they? Time ticking down here, 16 seconds. Time-wise or level-wise, where are some trades on here? I see at least a couple of 3 of them. You may see more. I don't know. Maybe you don't. Answers coming in. Terry, Adam, Joe C. Good. I see those answers. Those are looking pretty good. Rob J. Adam coming in. Bass with a couple of numbers. John. Time's ticking down. 13 seconds left. Where are the trades on here? If you were trading this market and it looked like that, where would you get in? That's basically the question, right? Where would you get in? I know it looks choppy. This isn't an easy one. By no means. This is not a layup, easy call here. Time ticking down, 9 seconds remaining. Where are the trades on this chart? Roger coming in a couple of times with a box. Miles, John R, good. I see it. Rude with a couple of times. Carl G, hey Carl. Walter weighing in. Hey Daryl, I didn't see you come in there. Daryl's got a couple of 3 calls in there. It looked pretty good. All right, time's almost up. 2 seconds left. Where are the trades? $12.28 from Jack. Tom F coming in with some good times and levels, swing levels there. Perfect. All right, time's up. Now, all those times, I can't read them all because there's so many, but I see that almost all of you got this nailed it. Some of you named 1, some of you named up to 3, which is perfect. Now, if you looked at the left of this chart and you saw that the market was in an uptrending move, uptrend, of course, is defined by higher highs and higher lows, and you felt that each time the market pulled back into somewhat shallow retracements that you could have gotten in, you would be correct. So there would be one there, right? Here's our next thrust. Here's our retracement here. So the second one would have been somewhere around the 1206 area, around just shy of the midband, around 4717-ish, 16-ish, right there. There's another one. I see most of you got that one. I didn't get much out of it. You got a little thrust up here to a fresh swing high. Pulled back. I wouldn't necessarily say that this was particularly a good one. I don't like the way that formed. However, you could make the case that around 1228-ish, around the midband, you did have a box. Borderline good bad box, borderline. But if you called out a trade right in here, that was appropriate in my opinion. You did get a short out of it right here. So the key here, obviously, and why we do these exercises is that repetition is the key to success and learning, right? So the more, and it's just natural of everybody's mind, that's how our brains work, is that repetition. Once you see something over and over and over again, it becomes sort of like a rote drill in your subconscious where you don't really have to think about it too much anymore. You just see it unfold in front of you and you automatically know what to do. Over here, you could make the case that there was a couple other region consolidation midband type trades around 1243-ish in here that gave you a little short trade coming out of the box. And maybe you made a case that you had one either or both here and then another one right here that really didn't give you much because now you're chopping. And this is actually going into the close on Friday. So the close of the market was right here. So you're right at the end of the market. 1214, yeah, that's what I was saying, Daryl. I don't know that this was particularly a good one in the fact that you were just shy of the midband there, and it's not very clean. I prefer region consolidation boxes that are more like this one, these ones right here. And what I mean by that is twofold when assessing a good region box: the size of it and the location of it many times, as well as how clean the top and bottom is. For instance, here, you cannot really, I mean, you could make the case that there was a box here, and you might have taken that trade. So I'll give you that one. Okay, good. I got another one for you. Ready? I'm going to start making these increasingly more difficult. Here it comes. Here's the Russell. Because you know what? Markets aren't always nice and easy, are they? No, no, no. Sometimes they're quite messy. Sometimes a market might look like this. Ready? Here we go. 30 seconds on the clock. Same exercise. This is the Russell. Let's see if you can identify any trades on this chart. Give me one more second here. I'll pull it up. Ready? Stand by. Let's see how the team approaches this chart. "30 seconds on the clock. Now, by the way, you don't, by virtue of the fact that I'm putting a chart up here and showing you price action on the Russell at the close on Friday, you know, the three choices are long, short, and no trade at any given time, yes? Long, short, and no trade. So as you look at this chart, where might you take what type of trades, long, short, or no trade? either from a time perspective down here. Now this would have been the left-hand side of the chart, 10:15, 10:20 Pacific to the left-hand part of the chart, and the close of the market was over here, 1300 is 1 o'clock Pacific, or on a scale of a number. 20 seconds left. While you're putting that in, I have to step away for 10 seconds. I'll be right back. Okay, I'm back. Time's almost up. Wow, a lot of good answers coming in. Bass coming in. Adam with some calls. Joe C, Rude, Phantom Trade, no trade. A couple of you interesting. John R and Carl G, stand down, no trades. Phantom Longs out of Roger and Walter. Tom F with some levels. Daryl with a kiss trade there. Midband. Okay, good. Excellent. All right, time's up. So here's the deal. First of all, I think we all know by looking at this chart that you were pretty much going into the close on Friday with the Russell in a trading range. Support was located in the range down here, more or less in this area down here, and you had resistance up in this area up here. And you're going sideways. So there's really no trend here for about the last hour and a half or so of the market on the Russell. You were coming off of somewhat of an uptrend here, so you had an uptrend, came up, hit this swing, could really never get through this 83.60 swing up here. You can see it just consistently kept hitting it. So the other way to approach this is not necessarily with midband trades, because midband trades in ranges can be a little bit problematic sometimes in the fact that, for instance, let's look at a couple of these midband consolidation patches. You know, you kind of had one right here. You had a borderline bad box, good box kind of scenario right in here. It was kind of messy, not very clean. The Russell's like that sometimes. You had kind of another one right here. But beyond looking at midband region boxes, looking at the overall context of what was happening here, the other trades could have been what? And some of you called this trading the range, right? Trading the range would be, you know, coming down in here into the outermost band, bouncing, coming back up here, rolling, coming down, trading it in that manner. So not necessarily looking for mid bands, because that's one of the reasons I wanted to show this, was that when you're in a range, sometimes trading the mid band is not necessarily your best option, in the fact that, you know, if there's support close by, for instance, this short here, if you got short here, there just wasn't, by the time you got filled and hit a target, there's almost really nothing in that trade. You're almost better off trading the range itself. How many of you like range-bound trading, and how many of you don't like range-bound trading? Do you like ranges, or do you avoid them? What do you think? Do you like ranges like this? Over here into the close, you had another range. It was even a little bit tighter, so you had support just under the mid-band here. I mean, would you be trading this? Would you be shorting up here and buying down here and buying there, covering up there, short down there? Would you trade this? Anybody? Oh, we got kind of a mix. Walter likes them. Roger and Bass and Nasir don't like them. I avoid them. Rob J likes them. Jim says, I haven't been too successful with range-bound trading so far. Okay, good. Rude doesn't like them. Tom says, I need some more practice. That's a good point, Daryl. Sometimes I trade them and I get a little bit of success, but then I get run over when it breaks out. Well, I mean, you know, that could have been the case here, and I was going to say that. Let's advance this chart and talk about this scenario right here. So, for instance, in this particular range, if you were, you know, buying at support, shorting at the bid band, buying, covering, buying support, and trading the range in this manner, when it came to this box right here, if you had been looking for a short, now, if you boxed it in and were looking for a break of a short, in other words, you're trading the range, so you're boxing the top, boxing the bottom, and you're just trading in this range here, and you didn't have long activated, or if you had short activated without long, then you didn't get that trade right there, right? If the box was too tight and you got filled short right here, well, then that would have been a stop out, and that's what Daryl's talking about. Daryl's talking about that if you're in a range and it eventually breaks one way or other, particularly if you're trading both sides of it. So if you're shorting the top, buying the bottom, shorting the top, buying the bottom, etc., and then you're shorting the top and it breaks out to the upside, well, then sometimes that last range-bound trade can wind up in a loss. Okay, good. Let's get a crude chart done here. I'm going to do one more exercise, and then I'm going to shift to something a little different. In fact, I'll start doing something a little bit different right now. And I'm going to move much quicker on these because I want to cover, I don't want to run out of time. I want to do a lot more trades. I want to cover a lot of different trade types here. Oh man, crude is such a mess. I'm having trouble finding a trade. Isn't crude like that? All right, here I'll do another exercise. I'm gonna tighten these up. I'm only gonna go 15 seconds on each of these because many times in the market you don't have a lot of time to make decisions. And here's how I'm gonna do this one a little bit differently. Okay, here's crude oil. This would have been just pre-market before the pit opened at 5:49 on Friday morning. You can see that we had a sell-off here. It spiked down to this 41 level, and it looks like it's going to start retracing. Now, where might it retrace to? If this market, 15 seconds on the clock, if this market's going to retrace, where might it go to? I'll help you out. The trend is down, so we're looking for a short, right? 12 seconds left. If the market's going to retrace beyond the right edge of this chart down here, where might it go to? Right over here. This is a little bit of the forward-thinking anticipation type of thought. Now, I'm be interesting to see how you all respond to this question in light of what we discussed when we first started the webinar, right? About how we think about retracements. Six seconds left. I see most of you have some very good answers here. Where might the market come to? Oh, Jeff G, I like that. I like Jeff's answer. We're going to read his in a minute. Well, we'll read it in 3 seconds. 3 seconds left. We're thinking forward beyond the right edge of the chart. Where might the market come to if and when it retraces? Time's up. Okay, now interestingly enough, we have a whole group of you here on the team this morning that put in a number, just one number. Like, for instance, Walter has 26, Daryl had 35, Adam had 35, a number of you had 36, 26. However, some of you put in, like Jack, Jeff, David D, and those three, they put in an area between 45, 41, 25, and 35, between 20 and the midband, and some of you, which was perfect. So I want to. That's intentionally why I did this. What did we say in the first 10 minutes of this webinar? We don't want to just think about the midband. We need to think of the midband retracement as what? An area, right? Now, there's nothing wrong. Don't misunderstand what I'm saying. I'm not saying that if you said I want to see it to come to 26 or the midband, that there's something wrong with that. That's not what I'm saying. That you can always have a good target area where you're thinking to yourself, man, it'd be nice if it came up right to that midband 26 and rolled. That'd be perfect. I'd take a trade right there short. However, the fact of the matter is, before this even happens and we're thinking about it, let's pretend we're in the live room all here together on Monday morning, and whatever market, crude oil, whatever you're watching, comes down with a thrust move as it did right here. So now we're thinking retrace. Maybe you're in the trade, maybe you aren't. Maybe you're looking for a place to put a stop. Maybe you're looking for an entry because you missed it. There are several scenarios that could occur, even before it starts to retrace, yes? The first one is that it could retrace very shallow. In our mind's eye, we're thinking this, yes? The next place it could go, it could come up pretty close or right to the midband. That'd be perfect. That's sort of our mid-range retracement, right? And the final scenario is that most of you I know do not like, but it happens. Excuse me. It could go a little deeper up into this area here past the midband. So when we say it's healthy to think of this retracement area as an area, not a number, in our mind's eye as we're envisioning what could happen, this is a healthy way to approach it. Okay? All right, let's play it out and let's see what happens. Here we're retracing. We rolled over. We come back down to the lows. So this retracement here was what? A shallow retracement, right? This was the first scenario right here. Shallow, not deep, did not come to the midband, but still rolled over and went back down to the lows. So acceptable, good trade, yes? All right, let's move on. Comes down, almost checks the bottom, starts to bounce again. Now where is it going? What's happening with these bars right here? Right, they're coming right to the midband, aren't they? This is our mid-range scenario playing out right in front of our eyes, yes? All right, so let's see what happens. Comes up, hits the midband, rolling over. There's our reversal bar. We're in, yes? Comes, checks the midband one more time with a wick of a candle, rolls over, and down she goes. Now, I know most of you, I don't want to put words in your mouths, but I know this is your preferred trade. You really like this type of trade the best. I know that. But we have to be prepared for times when the market just doesn't quite get there, or it goes a little bit beyond it. It's healthy to think of a retracement range. And any one of these three scenarios could play out at any time. Good. I like that. Good answers. All right, let's move on. Let's try one more crude trade here. Any questions on what I'm showing? No? Okay. Ready? I'm going to make this one really fast. This is a quick one. You're going to get 10 seconds on this one. Ready? Right-hand side of the chart. Is this range tradable, yes or no? Right here. Yes or no? Is that range tradable? Y or N? 10 seconds. Right here. This one where my cursor is. Y or N? Is this range tradable? Yes or no? Five seconds. Just a Y or an N. Is it tradable? Would you trade it? Yes or no? 3 seconds. Oh, I love that answer, George. I love when people throw stuff like that at me. So I'm going to come right back at it. Good. Time's up. No, it's too tight. Why? Because our rule of thumb is at least 20 to 25, preferably 30 or larger ranges are appropriate because, George, I'm going to circle back to you. I haven't forgotten your comment there. I'll be right back to you in a second. Hold on here. Look at this. All right, so there's the top of it, more or less, right? And there's the bottom. Arguably at or a little less, plus or minus 20 ticks. So in order to get into the top of a range, you have to have fading and slippage. So in actuality, you probably would not get in filled till like one of those bars right there. And to get out, all right, let's do a scenario here. Let's talk about some possible fills and why you might not want to trade something quite this tight. Let's say you get filled short there off the top of the box, somewhere in here perhaps. I'm not even giving you slippage, but slippage would make it even worse depending on your fills. And you might have to get out and cover and get long in there. How much profit is left between where you're getting in and out of those trades? Here's your profit right here. Does that look pretty? Is that enticing to you? There's nothing there. By the time you pay commissions and actually have some slippage, there's nothing. You broke even. There's not even coffee money. You can't even go down to Starbucks and get a latte with all the goodies in it. Yeah, the range is too tight. Now, George had an interesting comment, and I occasionally get this, and I like this. He says, well, it's easy to pick that off after the fact. Well, I beg to differ. Here's how you know, and I wanted to cover this, so it's actually fortuitous. Very good that you brought this up. Now, let's play this out in real time. Ready? Here we go. All right, we come down here. We had a sell-off. We come back up to the midband. It hits its head, and it rolls over. Now let's play out what it does. Okay, it holds right here at 47. Oh, wait. No, we don't know this. We got to take these lines off. Hold on a second. Chops around the midband one more time. Comes up. Hits a swing. Now, even before this goes any further on this chart, you're at 531. So this is just about a half an hour before the crude oil pit opens. So it's kind of in the pre-market. Wouldn't we all agree that as long, and this is why we put lines on charts. This is why Gary is so adamant about putting all those lines on that chart in the room. That wouldn't we all agree? Hold on, hear me out here, George. That as long as you stay, before I advance this chart, one more lick. That you are in a range as long as these swings are not taken out. Yeah, I'm not focused on the box. I'm addressing the comment of it's easy to pick this off after the fact. What I'm trying to show you is that the truth of the matter is you can see ranges in real time as they're unfolding. We don't have to be armchair quarterbacks on Saturday morning and come back and say, ooh, well, what you've done. Because the fact of the matter is you can see whether you're in a range right now. Starting at 530. Let's advance the chart. But before I do, wouldn't we all agree that as long as you're in between these two lines, that you are in a range? Yes? All right, here we go. There's 532, 533, 534, 535, 38, 39. Broke at the top just by a little bit, a couple of ticks. So what did we say? What did we say 10 minutes ago? So I'm checking everybody's mind retention this morning. Make sure you've got your had your cup of espresso and you're wide awake. First of all, the answer was the range is too tight that even if we were picking off the top and the bottom, there's really no money to be made in there. So we're not going to trade it at all. But even if you did, would a mid-band region box be appropriate in this price action of trading? Would a mid-band region box be appropriate for something like this? No. I mean, the first thing we said is back here at 530, 531. By the way, we're 20 minutes into it. Okay, this is what I showed when we started looking at the range. So what I'm trying to tell you is that you could have known way back as far as here that you were already set up in a range, and the range was too tight, and you didn't want to start trading region boxes. You know, another thing to do that might happen to you sometimes is something like this. Perhaps you put a region box on here, you got filled, and then you got stopped out, because then at that point you realized you were in a range. So would you continue to trade it? Obviously no. So it's important to know at any given time what the market condition is. This is the other overriding thing we need to know. Are we in a range? And if we're in a range, is the range tradable? Are we in a trend? What is the trend? Is the trend tradable? And so this is the big question mark. We always have to know our market condition. That's the overriding factor before we can even start thinking about whether we take pullback trades or region box types trades. Let's move on. What haven't we looked at yet? We looked at NASDAQ. Is there anything we haven't looked at? The Russell. What do you want to look at next? Do you want to look at one more crude? I'm going to have to wrap in a couple minutes here. What's the next trade you'd like to see before we wrap? You want to look at a couple more crude trades? I got one right here ready to go if you want to look at it. And this won't be after the fact. We'll do it right now. Okay, here we go. 15 seconds on the clock. Let's pretend this is Monday morning, early morning, and you're an early bird on Monday. And you're up and you see the market do this. Here we go, another crude trade. The market looks like this when you start looking at it, and you got to decide what you're going to do. 15 seconds on the clock. I'm not even going to help you. Open question. What are you going to do? 15 seconds. Been watching the market for a couple of minutes. You see it do this. What are you going to do? 12 seconds. You have to decide. What are you going to do? Open-ended question. Because that's the way it is, right? I mean, when you're looking at your chart, and say this is before the live room opens, you don't have somebody sitting there holding your hand. Oh, by the way, you should look at this or that or whatever. You got to make your own decision. That's why we got to have this training, so you can empowered to have your own chart to make your own trades. 5 seconds left. What are you going to do? Four seconds. Long, short, no trade. You know the options. You typed in all the trade types. Everybody knows what the trade types are. So open-ended. 3 seconds left. What are you going to do? All right, good answers coming in here. I really got to give some kudos and gold stars to everybody that's answering these questions, because you're really nailing it this morning. Yeah, I mean, put yourself in your shoes right now. This is Monday morning. This is the Super Bowl, the playoffs. The ball's being thrown to you. You got to catch it and run it. Time's up. All right, we have a range of answers here, interestingly enough, from everybody, from sort of looser answers to waiting for pullbacks. Rude saying, I want to see a retracement to 41.54. He doesn't say what he would do after that, but I'm assuming since the background is green and the bars are blue, everybody is looking to buy a retracement. So that would be first part of the answer, correct? I'm looking to buy a retracement. Then the second part of the answer is, a couple of you said nothing. That's okay. The most important thing is I didn't see anybody say buy now. Okay, that's really critical. And I'm just going to take 1 second to say this, because I've said it 100 times before. What we try to avoid is we never, ever, ever want to buy or sell a thrust. So when the market has done its thrusting move, part of the move, this is not the time to get in. Okay, we have to fight that tendency as much as we can. The natural tendency is it's going to run away from me. I'm going to miss a trade, and I'm not going to get anything. For the third time this morning, what I said earlier was to emphasize this point even more. We think of retracements as areas around the midband. As a move is unfolding in real time, we don't know. We don't know if it's going to retrace at all. And if it does retrace, we don't know how deep it may or may not go. Right? So that's why we think of the midband as an area. And I'm going to put this on here one more time, so we're all on the same page. It could be a shallow retracement. It could come down to the midband, and some of you put that in. I'd like to see a midband bounce. And it could go deeper. Those are the three, right? 1, 2, 3. Those are the scenarios that could play out. So before I advance this chart, the proper answer to the question was, you know, if you wanted to be long-winded about it, would be something to the effect of the market is in an uptrend. I'm looking to buy a retracement to get long, and I would look to take a bounce of a retracement somewhere between 41.62 as deep as perhaps 41.45. Forget it and hit send. Okay. All right, here we go. Let's see what happens. Market tick comes off the swing at 74. Starts to pull back a little bit, holding that swing, holding that swing. And what is it doing right there? What type of retracement was that? Shallow, mid, or deep? I'm talking about this right here. This retracement here. Was it shallow, mid, or deep? This was our scenario before the retracements occur. In our mind's eye, we were thinking of 3 possibilities. Well, perhaps you weren't, but what I'm suggesting is now you should. Maybe that's a better way to put it. Because everybody was looking for the midband. The fact of the matter is that many times it doesn't get there. So final question before we wrap. It was a shallow. Yes, it was not a mid or not a deep. This is the 3 scenarios on retracement when thinking about retracement trades. You can have very shallow retracements. You can have mid-range retracements to come at or near the midband. That would be a mid. And the deep retracements come perhaps below the midband or even a little lower. 3 scenarios could play out. Okay, where do we get in this trade? Final question. Where is the entry on this trade? I won't make that open-ended because that's going to be tough. I'm going to give you 4 bars. 1 is this bar right here. I'm going to start with the number 1 bar is right here. I'm going to give you 4 bars. There's bar number 1. 1, 2, 3, or 4. 1, 2, 3, or 4. Which one of those 4 bars is the entry bar off the retracement? 1, 2, 3, or 4. Final question, and then we wrap. What is the entry bar off this shallow retracement on crude oil early morning on Friday? Time's almost up, 4 seconds. 1, 2, 3, or 4. You just type in a number. What is the appropriate entry bar on this retracement? 1, 2, 3, or 4. All right. If you said, let me blow this up. In my view, it would have been 3 or 4. 3 is probably the correct answer here because it did reverse up and close above the other 2. However, if you said 4, that's okay too. They're both good entry bars. Came back, did not quite check or break that swing. So if your stops were a few ticks under that swing right there, like we discuss all the time, you never got stopped out, and then you did catch a nice move up. So in the live room in real time, when you're hearing these calls, when you hear calls like that, when you hear numbers or lines, or I want to see a pullback at least between 55 and 60, or I'm looking for a pullback to 45 to get long, or I'm looking for a rollover at, you know, whatever level, I'm looking for a bounce long. So implicit in saying that, I'm looking for a bounce long somewhere between 55 and 60. What those words mean is that the context around it is the trend is up. We're looking to buy, and we're thinking of what area we're going to do it at. The important part of that phrase is area. Area. We always think of retracements in terms of the area it might go to. If there's anything you remember from this morning, if you take that one concept away from you, hopefully this will dramatically help to improve your trading in terms of the entries where you look to get in and out of markets. Okay, with that, we have a wrap. Turning off the recording.